Then thanks for joining us on Business Now. I am Omobolanle Adeshui. The three tiers of government, federal, state and local government, have shared 902.05 billion naira November 2022 revenue from the Federation account. This is contained in a statement issued by the Federation Account Allocation Committee, FAC, yesterday in Abuja. The money, which was shared in December 2022, comprised of distributable statutory revenue of 681.07 billion naira, distributable value-added tax VAT revenue of 202.84 billion naira, exchange gain revenue of 7.16 billion naira, and 10.97 billion naira, and electronic money transfer levy revenue. The total deductions for cost of collection for November was 40.69 billion naira, and total deductions for transfers, refunds, and levies was 232.28 billion naira. The balance in the excess-accrued account as at yesterday stands at 473 million naira, or rather $473,754. The FAC statement disclosed that from the total distributable revenue of 902.05 billion naira, the federal government got 358.52 billion naira. The state government went home with 270.84 billion naira, and the local government councils had their accounts credited with 204.13 billion naira. 68.57 billion naira was shared to the benefiting state as 13% derivation revenue. In November 2022, the Federation account received gross statutory revenue of 938.62 billion naira. This, the statement said, was higher than the sum of 622.27 billion naira received in the previous month by 316.32 billion naira. And in the last 13 months, Nigeria has borrowed $9 billion from the World Bank at highly concessionary rates. World Bank's Nigeria Country Director, Shubham Shajuri, made the disclosure in Abuja yesterday at the launch of the World Bank's Nigeria Development Update, NDU, and Country Economic Memorandum. Shubham Shajuri said the bank's mission in Nigeria is to help the host country eliminate poverty and make life better. The World Bank, he said, has been able to attract funds in excess of $9 billion for financing into Nigeria in the past 30 months on concessionary rates. According to him, these funds are not donations, they are highly concessionary. We should be seen as trust partners. Whatever we can do to help Nigeria, we will do. The NDU report, he said, is part of the help. Nigeria's future is full of potential and how it can get there. We're here as a partner. We will provide advice. We will never dictate. The World Bank Country Director for Nigeria stressed the importance of adopting a single and market-reflective exchange rate and a stop-to-fuel subsidy, amongst other reforms the Bretton Woods Institution would want Nigeria to undertake. These reforms, Shubham Shajuri said, should be carried out if Nigeria is keen on charting an economic growth from the current situation. The report emphasized that Nigeria can achieve economic growth again if it implements a comprehensive set of bold reforms in a timely manner. Other reforms suggested by the World Bank to the Nigeria government are increase in non-oil revenues by raising value-added tax and strengthen tax reforms, containing inflation by reducing federal government recourse to CBN financing, reducing security by strengthening rule of law, facilitate trade and boost domestic value by removing import and foreign exchange restrictions. Others are increasing access to finance by strengthening institutional infrastructure for financial intermediation and boosting power generation by investing in infrastructure to reduce technical and commercial losses, amongst others. Minister of Finance, Budget and National Planning, Zainab Ahmed, says the federal government was owed approximately 5.2 trillion naira in debt. Ahmed, who stated this during a two-day sensitization workshop on Project Lighthouse organized for ICT and account staff in federal ministries, departments and agencies across the North Central Zone in Minna on Thursday said the debt was owed by over 5,000 companies and individuals. The minister, who was represented by the Director of Special Projects in the Federal Ministry of Finance, Budget and National Planning, Victor Amata, said these debts cut across 19 ministries, departments and agencies. She stated that companies and individuals owing the federal government agencies had refused to honor their obligations. She cited the lack of visibility of these transactions, poor information sharing and enforcement as reasons for revenue loopholes. Amata called on government MDAs to cooperate and provide quality and relevant debt-related information to populate the platform, saying it would improve the economic base of the country. The secretary to the Niger State government, Alhaji Ibrahim Matani, said the Project Lighthouse would cut excesses and retrieve the debt owed, which would help the government to use the money for other projects. And a member of the Petroleum Committee in the House of Representatives, Segi Ozogun, has disclosed how petroleum products marketers pay for logistics services in dollars despite the federal government has prohibited local transactions in foreign currency. According to Ogun, marketers paid in dollars to chartered daughter vessels with which the products discharged by berthing mother vessels were conveyed. He also alleged that the Nigerian Port Authority and the Nigerian Maritime Administration and Safety Agency were collecting revenues in dollars against a presidential directive. Ogun made reference to a resolution by the House which on Tuesday called on the Nigerian National Petroleum Company Limited to ensure adequate supply of the premium motor spirit, popularly called petrol, within 7 days. At the plenary on Tuesday, the House had particularly asked NNPC Limited to end this artificial scarcity within the next 1 week in order to ease the suffering of Nigerians, while calling on the Nigerian Midstream Downstream Petroleum Regulatory Commission to seek collaboration of the Nigeria Police Force and the DSS to ensure that fuel is sold at the regulated price and in all retail outlets. The House had further mandated its committees on petroleum resources, downstream and legislative compliance to ensure compliance with the resolution.